You know what keeps me up at night? It's not the markets, it's not the volatility. It's watching trader after trader make the exact same mistakes I made a century ago. The same patterns, the same delusions, the same financial suicide. I'm Jesse Livermore, and I've made millions in the market. Lost millions too. Went broke, completely wiped out, more times than I care to admit. And here's the brutal truth. If I could travel back in time and whisper one thing to my younger self, it would be this. 90% of you watching this right now are going to fail at trading. Not because you're stupid, not because the market is rigged, but because you're going to ignore what I'm about to tell you. Over the next 30 minutes, I'm going to walk you through the 7 reasons why most traders blow up their accounts, destroy their confidence, and quit. These aren't theories. These are painful lessons carved into my soul through bankruptcy, humiliation, and starting over from scratch. And trust me on this one, every single reason I'm about to share, I've lived it, bled from it, and barely survived it. So if you're serious about not becoming another statistic, another cautionary tale in some trading forum, then you better pay attention. Because what I'm about to reveal could save you years of pain and a fortune in losses. Let's start with number 7, reason without a system. Here's where most traders go wrong right out of the gate. They think trading is about gut feelings, hot tips, and lucky breaks. They jump into the market like they're playing roulette, throwing money at whatever stock their brother-in-law mentioned at dinner, or whatever coin some influencer is pumping on Twitter. I learned this lesson the hard way when I was 14 years old. Yeah, 14. I was working as a chalkboard boy at a brokerage in Boston, posting stock prices as they came through the telegraph. And I thought I was smart. I'd watch the numbers, feel the patterns, and place my bets at the bucket shops after work. For a while, I won. Made good money, too. But here's what I didn't realize. I wasn't trading with a system. I was gambling with luck. And luck always runs out. One day I got cocky. Started taking bigger positions based on nothing but my gut. Within weeks, I lost everything. Completely wiped out. Had to borrow money just to eat. That's when it hit me. The market doesn't care about your feelings. It doesn't care about your intuition. Without a system, you're just a pinball bouncing between wins and losses until gravity takes you down. Now look at today's traders. You've got people buying Dogecoin because Elon tweeted a meme. You've got day traders on Robinhood following some guy's Discord channel, blindly copying his plays without understanding why. You've got crypto bros YOLOing their life savings into whatever token is trending on Reddit. No system, no rules. Just chaos. Here's what a real system looks like. It tells you when to enter a trade, when to exit, how much capital to risk, and under what conditions you walk away. It's mechanical, it's boring. It removes emotion from the equation. When I finally developed my system, my tape reading method, my understanding of market cycles, my rules for position sizing, that's when everything changed. I went from a gambler to a trader. You want to know why 90% fail? Because they never build a system. They wing it. And the market has a special punishment for people who wing it. It takes everything. If you don't have a trading system right now, you're not a trader, you're a tourist. And tourists get robbed. Reason 6. Overtrading and impatience. And impatience, let me tell you about one of my biggest weaknesses. I couldn't sit still. Even after I developed my system, even after I knew better, I'd catch myself forcing trades just because I was bored, just because the market was open and I felt like I should be doing something. If my whole life, that itch to trade, it destroyed me more times than I can count. There's this famous quote, "The stock market is a device for transferring money from the impatient to the patient." And brother, I've been on both sides of that transfer. Here's the thing about great trading opportunities. They're rare. Most of the time, the market is choppy, uncertain, directionless. It's noise. And if you're trading that noise, you're just donating money to people smarter than you. I remember one stretch where I made a fortune on a single trade, shorted the market right before the 1907 panic, made over $1 million in a few days. You know what I did next? Nothing. For months, I just waited, watched, studied the tape, but most traders can't do that. They make one winning trade and immediately start hunting for the next one. They're addicted to the action, the dopamine hit, of clicking buttons and watching numbers move. Look at modern traders on these apps. They're trading every single day, multiple times a day. They've got push notifications, they're checking their portfolios at dinner. They can't sleep without looking at crypto charts. It's not trading anymore. It's an addiction. And here's the brutal math. Every time you trade, you pay commissions, spreads, slippage. You pay taxes on short-term gains. You make mistakes because you're trading out of boredom instead of opportunity. Death by 1,000 cuts. I went broke in 1915 partially because of this. I was overtrading, churning my account, trying to stay active when I should have been patient. Lost everything, had to start over from nothing. Good question, yes. Are the events we've been dealing with recent? The hardest thing in trading isn't finding good trades. It's sitting on your hands when there aren't any. It's having the discipline to do nothing when nothing is the right move. As I used to say, it was never my thinking that made the big money for me. It was always my sitting. Men who can both be right and sit tight are uncommon. If you're trading every day, you're not a professional. You're a gambler feeding an addiction. The best traders I ever knew made their fortunes on a handful of perfect trades, not thousands of mediocre ones. Sit tight, wait for your pitch, and when it comes, swing hard. Reason 5. Ignorance of risk management. This one almost killed me. Literally. Let me take you back to 1929. I saw the crash coming. I shorted the market at the perfect time and made over $100 million. 0 cents. That's equivalent to billions today. I was on top of the world. The greatest trade of my life. But here's what most people don't know. I gave a lot of it back. Not because I was wrong about the market, but because I didn't manage my risk properly. I kept adding to losing positions, thinking I could outsmart the bounces, thinking my ego was bigger than the market's capacity to hurt me. Risk management isn't sexy. It's not what traders brag about on social media. But it's the difference between a long career and a spectacular blow-up. Here's the simple truth. You can be right about market direction and still go broke if you don't manage your risk. I've seen it happen 1,000 times. Hell, I've lived it. Most traders think about how much they can make on a trade. Winners think about how much they can lose. When I was young and reckless, I'd put 50%, 60%, sometimes my entire account into a single trade. And when I was right, I felt like a genius. When I was wrong, I was broke. It took me years to understand. Trading isn't about hitting home runs. It's about staying in the game long enough to capitalize when the big opportunities arrive. Now look at today. You've got traders on Wall Street bets, putting their entire portfolios into one meme stock. You've got crypto traders using 100x leverage, turning a 1% move against them into total liquidation. You've got people who've never heard the phrase position sizing, throwing borrowed money at markets they don't understand. Here's what proper risk management looks like. Never risk more than 1-2% of your capital on any single trade. Use stop losses, always. Size your positions based on volatility, not how confident you feel. Have an exit plan before you enter. Boring? Yes. Effective? Absolutely. I went broke 3 times in my career. Each time it was because I violated my own risk management rules. I got cocky. I thought I was special. I thought the rules didn't apply to me. The market taught me otherwise. Painfully. If you're not thinking about risk before profit, you're doing it backwards. And the market will punish you for it. Maybe not today, maybe not tomorrow, but eventually, always. Protect your capital first, everything else is secondary. Reason. Fighting the trend. I have lost millions trying to be smarter than the market, trying to pick tops and bottoms, trying to catch falling knives, because I thought I knew better. Here's a quote I lived by, but wish I'd followed more often. The trend is your friend until it bends. Simple, right? But most traders, including my younger self, can't accept it. I thought, Let me tell you about one of my most painful lessons. In the early 1900s, there was this stock, Union Pacific. It kept going up and up and up. And I kept thinking, this is insane. This is overvalued. This has to come down. So I shorted it. And it went higher. I doubled down. It went even higher. I was convinced I was right and the market was wrong. You know who won that argument? The market. Always the market. I lost a fortune fighting that trend. Not because I was stupid, but because I let my ego override what the tape was screaming at me. The trend was up, everyone was buying, and I was standing in front of a freight train, trying to prove a point. This is the trap smart people fall into. They think they can outsmart the crowd. They see Bitcoin at 60K and say, this is a bubble, I'm shorting it. Then it goes to 65K, 68K, and they get destroyed. They see a stock dropping and think, this is oversold, time to buy. Then it drops another 50%. The market doesn't care what you think is logical. It doesn't care about your valuation models or your technical indicators. The market does what it wants. I learned to read the tape, to watch the actual behavior of prices, not what I thought they should do. When stocks were in an uptrend, I bought. When they were in a downtrend, I shorted or stayed out. Simple. But simple doesn't mean easy. Your ego will tell you to catch the bottom, to short the top, to be the hero who called the reversal. Ignore your ego. Follow the trend. As I discovered through painful experience, prices are never too high to begin a buying position, and never too low to begin a selling position. The trend doesn't care about your opinion. Respect it or get crushed by it. Those are your only options. Reason 3. Emotional trading and revenge. Trading. This one nearly destroyed me more than bankruptcy ever did. Let me take you to one of my darkest moments. 1906. I had a massive position in cotton and I was convinced I was right. The market disagreed. I lost big. And instead of accepting the loss and moving on, I did something stupid. I wanted revenge. I immediately jumped back into the market, bigger than before, trying to win back what I'd lost. Not because I saw an opportunity, not because my system said to, but because my ego was bruised, and I wanted to prove I wasn't wrong. You know what happened? I lost even more. That's revenge trading. And it's one of the deadliest emotions in this business. Here's what happens. You take a loss. It stings. Your pride is hurt. Your account is down. And your brain starts screaming at you. You need to make that money back now. You can't let the market beat you. Double down. Trade bigger. Get aggressive. And that's exactly when you make your worst decisions. I've watched traders destroy years of gains in a single day of revenge trading. I've done it myself. You stop following your system. You stop thinking clearly. You're not trading the market anymore. You're trading your emotions, and the market doesn't care about your feelings. Look at modern trading. It's even worse now. You've got traders who can place a trade in seconds on their phone. They take a loss at lunch, and by dinner they've blown up their account trying to get even. No cooling off period, no time to think, just pure emotional chaos. I learned that after a significant loss, the best thing I could do was walk away. Go to the beach. Take a few days off. Let my head clear. Because trading while emotional is like driving drunk. You think you're in control, but you're not. Fear and greed. Those are the two emotions that will kill you faster than any bad trade. Fear makes you exit winning positions too early. It makes you freeze when you should act. It makes you miss opportunities because you're paralyzed by the memory of past losses. Greed makes you hold losing positions too long, hoping they'll come back. It makes you overtrade, chase trades, ignore your stop losses. I went broke multiple times because I let my emotions override my judgment. I held on to losers because I couldn't accept being wrong. I chased gains because I got greedy. The best traders I ever met were almost robotic. They followed their system regardless of how they felt. They treated losses like business expenses, unpleasant but necessary. They didn't take wins personally or losses personally. If you find yourself angry at the market, excited about revenge, desperate to prove you're right, close your laptop, walk away, do not trade. The market will still be there tomorrow. Your capital might not be if you trade emotionally today. Reason. This is the silent killer, the one that sneaks up on you. You can have the best system in the world. You can understand risk management, trend following, patience, all of it. And you'll still fail if you can't execute consistently. Let me tell you about my greatest weakness. I knew what to do. I just didn't always do it. There were times I'd have a perfect setup. My system said buy. Every indicator was aligned. And I'd hesitate, talk myself out of it. Then watch the stock run without me. Other times my system said stay out. The market was choppy, conditions weren't right. And I'd trade anyway because I was bored or overconfident or desperate. Discipline is doing what you're supposed to do even when you don't feel like it. Especially when you don't feel like it. I've watched traders develop brilliant strategies, backtest them, prove they work, then abandon them after 3 losing trades. I've seen people stick to their system for months, build their account up, then blow it all in 1 week of undisciplined gambling. Here's what most people don't understand. Trading success isn't about being right all the time. It's about being consistent, following your rules, showing up every day with the same approach, regardless of whether you're up or down. Think about it like this. Imagine you're a surgeon. You know the procedure, you've done it 100 times, but one day you decide, you know what, I'm going to skip that step. I'm going to wing it. I'm feeling creative today. That's malpractice. That's how people die. Trading is the same. You have a procedure, your system, and when you deviate from it, you're committing financial malpractice on yourself. I lost a fortune in the 1930s partially because I stopped following my own rules. I built successful methods through decades of experience, but I got lazy, undisciplined, started making exceptions. The market doesn't reward exceptions. It rewards consistency. Look at successful traders today. They're boring. They do the same thing day after day, year after year. They don't chase excitement. They execute their edge consistently until compound returns make them wealthy. Your system doesn't have to be perfect. It just has to be consistently applied. A mediocre system executed with discipline will outperform a brilliant system executed randomly. Most traders fail not because they don't know what to do. They fail because they can't make themselves do it consistently. If you can't follow your own rules, you don't have a trading problem, you have a discipline problem. And that's a much harder fix. Reason 1. Refusing to admit you're wrong. And here we are. The number 1 reason traders fail. The one that cost me more than all the others combined. Right, the inability to admit when you're wrong. Let me tell you about November 1940. I was broke again, despite making over $100 million, 0 cents in my career. Completely wiped out. Living off the charity of friends. How did I get there? I held on to losing positions far too long. I refused to admit the market had changed. I convinced myself that if I just held on a little longer, I'd be proven right. I was wrong, the market was right, and it cost me everything. Here's the brutal truth. The market doesn't care about your ego. It doesn't care that you've been right before. It doesn't care that you spent hours analyzing this trade. It doesn't care that admitting you're wrong feels like swallowing glass. The market only cares about one thing: reality. And if your position contradicts reality, you will lose. I spent decades watching traders, brilliant traders, destroy themselves because they couldn't say three simple words: I was wrong. They'd enter a trade based on solid analysis. The trade would move against them, and instead of cutting the loss and moving on, they'd average down. They'd tell themselves stories about why the market was wrong and they were right. I did this over and over, even after I knew better. There was a trade in the 1930s I was long on the market, convinced we were heading into a sustained rally. The market turned, my position went red, and I held. Every day telling myself it would come back. Every day losing more money. By the time I finally admitted I was wrong and got out, I'd lost millions. Millions that could have been saved if I'd just admitted my mistake early and taken a small loss. Your first loss is your best loss. I learned that the hard way. When a trade goes against you, that's the market giving you information. It's telling you, your thesis was wrong. Conditions have changed. Get out. Most traders ignore that information. They hold losing positions until a small loss becomes a catastrophic loss. They blow up their accounts not because they were wrong. Being wrong is inevitable, but because they refuse to admit it. Look at modern examples. Traders holding meme stocks from $300 down to $20 because they believe in the company. Crypto holders watching their coins drop 90% because they're diamond hands. Options traders letting contracts expire worthless because they can't accept they misread the market. This isn't conviction, this is delusion. The best trade I ever made wasn't my biggest winner. It was a trade where I was wrong, admitted it immediately, took a tiny loss, and moved on. That discipline saved me countless times. Here's what most people don't realize. Admitting you're wrong isn't weakness, it's strength. It's the only way to survive long enough to be right when it matters. Every time I went broke, it was because I refused to admit a losing position was a losing position. I held on to hope instead of cutting losses. I protected my ego instead of my capital. If you can't admit you're wrong quickly and cut your losses, you're not a trader. You're a martyr waiting for the market to sacrifice you. The market is always right. Your opinion is irrelevant. Accept this or go broke. Those are your only choices. So there you have it. 7 reasons why 90% of traders fail. Every single one carved into my soul. Through bankruptcy, loss, and humiliation. No system. Overtrading. Ignoring risk. Fighting trends. Trading emotionally. Lacking discipline. Refusing to admit you're wrong. I've been that trader. I've made every mistake on this list, some of them multiple times. But here's what I want you to understand. I'm not telling you this to discourage you. I'm telling you this because these are solvable problems. You can build a system, you can develop patience, you can learn risk management, you can follow trends, you can control your emotions. You can become disciplined. You can learn to admit when you're wrong. It's not easy. If it were, everyone would be successful, but it's possible. I made and lost fortunes. I went from having nothing to having everything, then back to nothing again. But through all of that I learned, and what I learned can save you decades of pain if you're willing to listen. The market is the greatest teacher you'll ever have, but it charges tuition in dollars and emotional scars. Pay attention, learn from losses, follow your system, manage risk. Stay disciplined. Most importantly, respect the market. It's bigger than you, smarter than you, and it will outlast you. Your job isn't to conquer it, it's to align with it. 90% of traders fail because they fight these principles. Don't be part of that 90%. The market doesn't care who you are or where you came from. It only cares about one thing. Can you adapt? I've given you the roadmap, the mistakes to avoid, the lessons I paid for with my fortune. What you do with this information is up to you. Now get out there, follow your system, and prove you're part of the 10%.